Good day, everyone. Welcome to another episode of Market Views. Today, I'm joined by Zenzi and Rufaro. We have a couple of issues to discuss this week. The main topical issue that has been happening on the Zimbabwe Stock Exchange is the merger of CBZ and a couple of other counters on the ZSE, namely FML. We're focusing mainly on this merger with FML because FML incited that soon after the merger is done, they are planning on delisting on the ZSE. So, Rufaro, what is your take on this merger between CBZ and FML, namely, and others?
Okay, thank you, Hilton. Well, interesting from the point of view that they are trying to create a big financial institution that can be in a position to go out there and secure funding. But from the perspective of an FML shareholder, what I would say is if you want to remain as part of this piece of cake, it's probably better for you to sell your stake in FML right now and get into CBZ, because it's never good to get to a party where you are the minority shareholder. So that's my advice. If you still want to get exposure in this new company, it's better for you to exit FML whilst you still can, and whilst you still can get good offers, and probably get into CBZ so that you remain as part of the conglomerate.
Yes, any additions?
Yeah, I'm sure CBZ has been very much interesting. Many news coming from CBZ with the company announcing that it's going to publish an ETF in the coming month of February. But now on this note of FML, I'm sure FML, the share price is reflecting what's currently happening, that investors are not really bullish about it. You can actually see with the year-to-date of 2.5 against a year-to-date of the all-share index, which is 18%. And if you actually think of the year-on-year, it's on 26.5. So I'm of the view that shareholders should exit FMO if possibly they can still get CBZ shareholders. And also notably, CBZ announced that it's on the monetary policy statement, we actually saw that CBZ it intend to bundle all its operation in the building society and the bank merging. And notably, the bank is having a market cap of 127, a core capital of 127 against the building society, which has a negative balance of 42 million. And it is interesting seeing the information inefficiency of ZSC that after the announcement of the news, the share price of CBZ didn't take any knock of that, because now that since it's now merging with the bank, with the building society that has a negative balance, that was supposed to have reflected on the share price of the CBZ counter, but that didn't happen. It actually shows the inefficiency of the ZSC boss.
Yeah, but I think not forgetting that in the previous year, CBZ was the only counter in 2021 with a negative year-to-date. So does this show that CBZ in the past years or in the past year, investors haven't really been bullish about the counter? We've seen not quite significant trades, but they're all ranging around the same price. Do we expect then the CBZ price to go up, or we're going to keep on with this around?
So it's important to look at it not only from a one-year perspective,
yes.
Because in the previous year, I think it was 29, CBZ was the best performing counter on yes. the ZSE. So I think investors felt that CBZ had heated. Yeah. So keeping on getting into CBZ wasn't going to bring them any value. Yes. So that's why we didn't see much in terms of share appreciation in 2021 with CBZ. But what I think also with Zenzi, we always believe that markets are always right. And in terms of the informational efficiency that Zenzi alluded to, it's probably that because prior to RBZ telling us in the monetary policy that the CBZ building society is not meeting its core capital requirement, it had issued that the CBZ, the bank, is going to merger with the building society. So probably the information was already out there. People knew before the monetary policy that the building society is not meeting its core capital requirements. That's why it's being consummated into the bank. So yeah, maybe the markets are efficient, and it has already been reflected in the current share price. Yeah, that's what I think.
Right. Anything to add? No. Moving on the issue of conglomerates, we saw a major conglomerate which was topical in the last decade of Miko's kingdom, where Tanganda is now unbundling, or we say Tanganda was unbundled from Miko's to be a standalone company on ZSE. We have different sentiments on the market. Others believe it is overvalued. Others see it as undervalued. A couple of people then see it as fair valued, with the price around $60 and $70 per share. Rufaro, what is your take on the valuation of Tanganda, and what's your view on the issue?
So I've been very clear. My view is that I think Tanganda is overvalued. So the first thing I did is I tried to do a relative valuation, a PE valuation of Tanganda, because as Tanganda demerged from Miko's, they gave us their financial for the past 5 years. And I looked at the sustainable earnings over the past 5 years. It was around 1 million USD worth. So I did a PE valuation and I arrived at a price of $25 a share. Then I said to myself, okay, let me not be too naive here. It could be more than that. So what I did is I tried to get back into history. You know, before 2007, Tanganda was a standalone company, and it got incorporated in the four-way merger that happened. So Tanganda shareholders were offered 17.2 shares for every 100 shares of Miko's. And the market cap of Miko's around that time grew to about $158 million. Giving Tanganda's share in that conglomerate at around 27, coincidentally, which is equivalent to what Tanganda market cap would be at $25 a share. So, to be honest, that's where I think Tanganda should be. I understand the euphoria around investors. You know, when a new counter comes on the market, or when a counter is returning, they call them returning soldiers, is returning. We saw that with Cassava last year. When Cassava returned, its share price shoot. We saw that with CFI and Seedco as well. So I just think it's this thing we have on the Zimbabwe Stock Exchange to say we want to jump into either new counters or counters that are returning. But in true, I don't think Tanganda is anywhere near $70 a piece.
All right. On that note, we cannot forget that it's been 10 years with Tanganda being operated as a private company. There are, of course, different new operations. They have new investments. They have they're now focusing on different plants, macadamias. And what's your addition on Tanganda as it is now comparing to how it was in 2007? And do you believe it is overvalued with Zenzi, or you are okay with the 60-70 price, or if anything, it is undervalued to you?
I am very much of different opinion with Rufaro that Tanganda is actually overvalued at the current rate. I'm sure that the whole of the boss is currently using the current circumstances. The whole boss is very much overvalued in US dollar terms if you try to use them. So the problem that we have currently is the market is still trying to figure out what's the real exchange rate that we can use to transact. So I'm of the view that Tanganda is currently undervalued, and if you look at what he's saying it's about around 27. And if you look now, that sector PA, it's Ariston, which you can use to compare Tanganda with. You can see that Tanganda using a black market rate, it comes to 24-25 million US dollars. So I'm of the view that Tanganda at the current rate, it's still trading within its range. Now comparing the two business operation, Ariston has got a hydropower plant which generates about 300 kilowatts, whereas Tanganda in the March 2020 in this coming in the month of March, they are anticipating to unleash into the market a very big power plant, which is going to generate 4.4 million. And in terms of, if I look at the future of Tanganda, the management is intended to move the Tanganda counter to VFX, which is the US dollar boss, due to its nature. You know, it can actually go benefit from the incentives that are there. You know, currently Tanganda exports 80% of its tea. They export 100% of the macadamia which they produce, and 90% of the avocados. So I'm sure at the current rate, I'm sure Tanganda is slightly below. My estimate of Tanganda is supposed to range in the range of 90, using all the current circumstances which are currently happening on the bourse.
All right. During the week, we also reviewed trading updates from Hippo and financial statements coming from Nampak. The major highlights we can give with Hippo is said they have a 2% increase in their production in their sugarcane produced by the company. However, the market overall went down their sugar production by about 18%. This actually shows that the company or the counter is operating better than the market, whereby we see Hippo is actually the major
Contributor.
the major contributor here in Zimbabwe with a great market share. What's your addition on Hippo? And also, if anything you'd like to add on the other counter, we have Nampak producing the financial statements. Any additions you have on those?
Also, Nampak, I think they finalized the Softex deal with Amalgamated Regional Trading. They were disposing it. And just interestingly, they are investing in capex. You know, it's always a good thing when companies invest in capital expenditure, because it tells us about the future of the company. They are investing today for tomorrow. So yeah, it's interesting. Let's wait and see.
Yeah, and also in Hippo, we should also take note of the increase in capital base. We in the customer base, we are seeing numbers coming up from Zim states where we're saying that population is improved by from 2012 to now. We are now 4 million greater from 13 million. So you actually see that sugar is a commodity that every family that needs. So by that increase, it actually speaks to the business model of Hippo Valley, that the customer base has increased, and therefore the company valuation is supposed to also to increase as it is investing into more into the production. And it was also seen the company doing well on the Kilimanjaro, the 99-year list. The company announced that they're now in the list is about to be signed with the Minister with the Minister of Agriculture. That agreement of Hippo Valley, and notably also on the company, the management also stated that the trade quota for the Kenyan market was reduced by 40% due to the trade quota in Kenya, and they're also looking into areas which they can expand into, where they can export their sugar to in the region. But notably, the sugar is in Zimbabwe is at some point where they're actually exporting the black market was exporting sugar to Zambia via the informal channels, which is actually very good news for them, since most of the people we're buying it using US dollars from Hippo Valley.
All right. Thank you everyone for being with us today. Follow our Facebook page, FinCent Capital. Like and subscribe Facebook, it's FinCent Capital, and follow our Twitter page, FinCent Capital. Have a good day.